travel through the day. We've got a great geographic spread this morning from China to Dubai and then to the west into Europe and Holland. So let's kick off, as always, on Monday morning with Omar Najia, Global Head of Derivatives at BB Energy. Omar, despite all the tumultuous OPEC plus noise over the last few days, the oil price is little changed, a little up this morning in Asia. Your thoughts on the turmoil of the OPEC noise, and yet the market seems to be relatively uninterested?
Well, I mean, we've had lots of comments before about how, the oil seeing OPEC and OPEC plus and the strategy and wow. But what we're seeing right now is the true nature of OPEC, a kind of, Inspector Clouseau kind of moment where they keep, smacking against walls with no idea what's going on. They seem to, have no idea, not care. The Saudis and the UAE not talking to each other, complete bedlam. But I think the reaction from the market is, that we know what the true nature of OPEC is. So I think this facade of a kind of, carefully calculated, I don't know what, amazing strategy, I think you see it for what it is. In other words, they really didn't talk to each other coming into like this meeting, which beggars belief. So I think the market is either going to decide on, this is, OPEC as it always is, or decide basically that, the best option basically is to wait and see. They can't figure out if this is really what's going on or if this is some kind of Machiavellian plan or whatever it is. It just reminds me of watching like, one of these Pink Panther movies. Because it's comical, I swear. I mean, I could laugh.
But the question of the Pink Panther metaphor is which character is which in the context of the OPEC dance. I mean, ultimately, given that we've talked a lot, Omar, that this is very much a managed market, a market propped up by managed supply, this is quite a critical moment if it was to go wrong, despite the sort of comical nature of it.
Yeah, big time. So basically what the market is asked to believe, or what the general public is asked to believe, is that the two biggest allies in OPEC haven't talked before this meeting. They basically come, with a briefcase or whatever it is, little glass of water, sit down, and then all of a sudden, oh, what a surprise, what are we going to do now? Which I find, I really can't believe that. So I don't know if there is some kind of other agenda. Usually these OPEC meetings are dressed up. They like also, apart from Pink Panther, they're like these Mexican soap operas where it's like, oh, does Maria really love Juan? Oh my God, no, it's actually Juan who loves Micaela and all this kind of stuff.
And you get that zoom in shot, and it holds there as it did yesterday on the UAE oil minister who appeared on most media channels. Let's go to the view in China this morning. Victor Yang, senior editor at JLC Network Technology. Victor, good morning. One of the questions beyond the OPEC, on the supply side, obviously OPEC, but on the demand side, there seems to be a question mark starting around how healthy is China? So I put that question to you at the beginning of the second half of 2021, in which China is forecast to grow close to 10%. How healthy is the Chinese economy?
Well, the growth would be quite healthy, I would say. Yes, but if say 10%, there might be some slightly kind of ambitious maybe. And now we are seeing some kind of signs of slowing growth. Well, say like in the factory, say the feedstock costs are so high that some factories have stopped taking new orders. Well, say for exports. Well, say if you are shipping these cargoes to say the United States or to Europe, and the customer cannot afford such a price as well, and then we are not making no money. So some factories have actually stopped taking new orders. Well, this will kind of slow down growth to some degree. But on the whole, most sectors are still thriving, and demand, say on the whole, is kind of growing. So we still expect the government to achieve at least its target of 6%. But if you are talking about 10%, that's above the government's target, and it seems a little too ambitious as well. And so there's a general idea for now.
There was always a view that the official target of 6% was, at least at the beginning of the year, seen as a the low end of the range. There was a general consensus that China would outperform that 6%, and the World Bank had it high single digits. You would say at this point in time that the official target is probably more realistic.
Well, I would say yes, it might be something between the targets and the World Bank's forecast. Well, and as for the World Bank's forecast, might be a little optimistic too. But anyway, I still believe it would be over 6%. I mean, the government's targets. Well.
Okay, so remains healthy but not bionic, which is a difference. Perhaps it could be a few 100,000 barrels of oil demand a day, or even more. Perhaps we'll have to see. But clearly, it's not the juggernaut it was last year. Let's leapfrog over to Europe, over to Holland, where Dr. Charles Elinas, CEO of Cyprus Natural Hydrocarbons. Dr. Charles, I welcome your views this morning as we sit again. OPEC are due to reconvene in Europe, in virtual Vienna this afternoon. What does the outcome, what's at stake, do you think, today at this meeting for all producers, including Cyprus, who's looking to develop its deep water gas reserves?
Well, an agreement is important, and today the UAE has given indications that it's not going to be too difficult, because it reconfirmed its commitment to OPEC, and I believe there would be an agreement. But does it matter very much? At the end of the day, if there is no agreement, the current situation will continue and oil prices will carry on increasing, because demand is expected to carry on increasing. Some of the analysts expect demand to increase by more than 2 million barrels of oil a day. If they do agree, and they agree a number below 2 million, it doesn't really impact the price dramatically. So
there is, Dr. Charles, there's two things in the oven at the moment. One is output adjustment beyond August, and there generally seems to be a consensus, and the UAE has confirmed that everybody's on board with that increase from August to December at about 400,000 barrels a day. The big question appears to be the extension of the agreement beyond April next year. The heavy lifters, Saudi and Russia, seem very keen on extending that agreement now, whereas the UAE seems very reluctant because they want the baseline addressed. Should this derail the existing agreement? Is it that important at this time?
So I don't think so. I don't think it will derail the agreement. I think in the end, the UAE, they will find a compromise somewhere in between. There seems to be willingness from the part of the UAE to come to some kind of a deal. But I'm coming back to the same point. Is it going to really matter very much, provided the change in oil production isn't dramatic one way or another?
Well, that's a big if, isn't it? Ultimately, this oil market is propped up by a coordinated managed supply. There's still 6 million barrels of idle supply on the sidelines. If this was to go into chaos, everybody could push a lot of oil on the market quite quickly.
Well, if they don't come to an agreement, they go back into the mess we had last year, then obviously the implications will be horrendous. But they will be shooting themselves in the foot, because surely they have learned from what happened last year that not agreeing and going free for all is not going to help anybody, not going to help themselves or anybody else. So I do believe, coming back, I do believe the UAE will come along, and they will find a way forward during the next few days.
Omar, looking at some of the other issues we're seeing underpinning the market with the OPEC cuts, even if we put aside this idea of extending the agreement beyond April and presume that there is a consensus for an increase of only 400,000 barrels a day per month from August, that would still see stocks draw and be very supportive to prices, would you think?
Yeah, absolutely. So, I mean, the question on my mind, forget about, what's happening now in OPEC and whatever. So either they shoot themselves in the foot or they come to an agreement. More likely they come to an agreement. So I think basically oil prices keep rising. The question is, I think that we're getting, WTI is currently, the high in WTI is currently something around 76. Okay, I like to look at markets from a technical kind of perspective. Everybody's saying $100 oil, and I don't believe it for a second. And maybe WTI, my target's always been 80 for the year. It printed 76 something. So somewhere between 78 and 85, I'd get rid of everything in terms of length and start to go short, simply because a lot of, when you start seeing all this news in the market about, about all this, $100 oil.
Was that the sell? Was that the sell order coming in?
Yeah. No, I mean, to be honest, I've closed most of my position now. It's only like stuff above like 78 calls and 85 calls, and I'll keep them for a little while longer. But I'm looking. I don't want to be involved once we get past $80, let's say, on WTI. I don't want to be involved because I'm not a believer. These markets are managed markets. At some point, you're going to have a pullback, you're going to have a decent pullback, and then basically you come in. But if you look at it, like the big traders at the beginning of the year, the Mercurius, the Vitols, the Trafiguras, they had whatever interview with Bloomberg and Reuters, and they said in January, the market, WTI is capped at $40. And then maybe like 2-3 weeks ago, they said, the market's going to 100. And what's that tell you? So every time they say something, the opposite happens. So it's the kiss of death. I'm telling you. So market gets, we're mostly out. Market gets to 80 WTI and they can have the rest of the froth. And so I would be looking for the market to pull back.
The demand, and particularly, I know you're not looking at the sort of COVID thing, but ultimately there does seem to be, and let's just go back to China on this point, Victor. There does seem to be some issues, as we talked in the earlier comment about Chinese growth, but also the spread of the COVID variant across Asia, forcing lockdowns. But the other point that is challenging the Chinese economy, and I'd welcome your opinion on it, is the growth of debt. And what is the status? The charts that there's a lot of reporting now that there's a dramatic increase in Chinese debt and the ability to, challenge to the ruling government to manage that. What's your thoughts, and how big of an issue is it?
Well, the Chinese government started to rein in the local government's debt a few years ago. So the debt you mean by local government, well,
yeah,
and it has been kind of shrinking over the past years as well. So the central government is trying to make sure this debt will not go out of control.
But over the last year, Victor, it suspended, the sort of control was stopped because of the COVID crisis and so on. And measured against the size of the economy now, the debt is at record levels. So there has been, pre-COVID, there was attempts to control it. Then it was suspended. Are we going to get back now to more control?
Yes, well, I believe so. Well, and over the past year, we all know is this kind of similar situation for all over the country, all over the world.
Yes.
And unlike in the past, well, say when the United States, printed a lot of cash in, say, like in 2008, and other countries follow suit, say, like including China. but not this time. And as a result, the product prices were in the United States surge. And so the government was actually quite aware of the debt, and they trying to make sure that it didn't go out of control. And I believe this would be, well, returning back to normal quite gradually. Yes, in China, we have this confidence. Well,
And is there what, as you say, if China is controlling the debt, going back to putting controls, what is the economic consequence of that? Obviously, you would think less spending, less growth.
well, there need to be some kind of balance between these two issues. Well, sure. But on the one hand, well, actually, infrastructure construction is not slowing down actually at this time of year as well. As well, we are still kind of stimulating, well, development and growth as well. But on the other hand, say some production and some industrial activities are kind of restricted because, well, they are not well conducive to the future development. So the government is trying to strike a balance between, well, this development and the debt control. And say like in the oil industry, say like is speeding up, well, the elimination of oil refineries, right? So stop investing in such industry. Say like Sinopec, Maoming Petrochemical, was planning to build some chemical units, well, in its refinery in Guangdong. And the plan was, well, submitted, well, months ago, and now in June, it was denied, well, by the Guangdong government, saying that, well, refineries shouldn't, well, build new units under the name of integration. Well, this is against, well, the government's new regulations, well, on say like control of the capacity of environmental protection and so on. So this is quite a typical issue. I mean, quite a typical example. Say in the past, it almost never happened. Say state-owned companies, Sinopec or PetroChina, say plan to build a new refinery or new units. Well, and it was not approved. This almost never happened before. So this is quite quite an example.
Right,
for
that is.
government's control. Yeah.
Dr. Charles, we have the story in China there, clearly still strong, but not, you know, the juggernaut of last year. America, US still, you know, leading, if you like, and the big jobs number last week, 850,000 jobs created in the month of June. The question, if I have for you, is where is Europe now? Some weeks it seems like the glass half full, the next week glass half empty. Now we're seeing the UK announcing that masks are going to become some kind of optional thing. We've had on July 1st, the European travel program has opened up. Where do you see the European recovery now, and particularly with the summer travel season?
As you say, Europe is dithering one way or another. Is going forward one moment, backwards the other. But in general, the move is forward. In the UK, is very likely now to remove all restrictions by the 19th of July, and in other parts of Europe, relaxation continues to come. As a result, I see Europe following hesitantly behind the US. And as you pointed out, the US is moving fast ahead. I read during the weekend that travel has almost returned back to 2019 levels in the US.
Gasoline prices are at near record levels across an average of nearly $4 per gallon.
Precisely. So Europe is going slowly in the same direction. It's and now obviously Europe is in the middle of rolling out the recovery funds. Ursula von der Leyen is going from capital to capital, announcing the plans, and so Europe is starting to look forward to change, to opening up, I believe. As a result, next month we expect also massive announcements from the European Commission on the new plans, which revolve around the Green Deal and green energy and the famous Fit for 55, which coming out next month. So Europe is now starting to open up quite a few new areas, feeling more confident about the future.
Let's go to the survey question and give everybody in the room the chance to comment on this morning's thesis, which is ultimately the idea of the OPEC agreement today, or the OPEC meeting today, I should say, not be presumptions. But the question to the group is, should OPEC risk their 2-year supply agreement by insisting on sign-off now for extension beyond April 22? They seem to have agreement on supply for the rest of the year from August, but should they couple it with this extension beyond April 2022 and risk everything? That's the question to the group. And then we're going to ask our panelists to give us their forecast for the week ahead and the obvious outcome of today's meeting. Omar, OPEC Plus have had a chance to sort of bash this thing around, wash their dirty linen in public, as they say, on a weekend in which everybody in the US is at the beach, bank holiday weekend, July 4th, barbecues and all of that. So the market isn't paying much attention, but it will tomorrow. What's your outlook for this meeting and for the rest of this week when America gets back to business tomorrow? Or on Tuesday, I should say.
Well,
tomorrow, tomorrow.
I think basically people pay attention. I mean, people pay attention because it's money. It's not like, they're playing a game of risk. So they're paying attention. It's just that with, the obvious fact is either they basically jump off a cliff all holding hands together.
I mean, there was a lot of volatility last week ahead of this meeting and during it. It was a spread of $3, even though at the end of the week it was only up 18 cents. But ultimately, there was a lot of bouncing between a $3 range. Would you expect that to continue?
I don't know if it's going to bounce in the $3 range going forwards, but I do know that the trend basically is higher. The market is looking at OPEC as either basically wanting to kill. They want to commit suicide or they want to do what's rational. So you have to assume that they do what's rational, but of course nobody knows. So hence the lack of market reaction. But in general, I think the US, China, all the rest of them, basically the global economy is doing just fine. I mean, it's a little bit funny that people want to focus on Chinese debt. I mean, if you want debt, look at the US, look at Europe. I mean, that's massive. China's nothing in terms of quote unquote debt to GDP. I mean, it's absolutely nothing. So
I think the big difference perhaps in China to a certain extent, and I take your point absolutely, given the scale of what's been done in the last decade in the West, but ultimately one of the question marks in China is the transparency to the off-balance sheet debt, which seems to be an unknown that keeps people a little nervous.
Yeah, I agree. And the other point I wanted to make is that markets, the reason why I expect the market could go up a little bit and then fall off is basically the markets front run what is happening. They don't basically wait for something to happen and then they anticipate. So I don't know why the market's going to fall, but I'm sure somebody will find a reason and they'll blame it on that. They'll say fears or deluge or whatever it is, or they'll pick a reason. But I think we've rallied substantially. We've rallied from a negative number, but call it $10 on WTI, to a high of 76 something. I think we've still got a little bit left. But after that, I think the market needs a breather. People take money off the table, and sometimes it's not more than that. People.
Well, in a way, it's sort of buy the rumor, sell the news.
Yeah,
at the end of the day, the sort of euphoria of the expectation of the second of the half of this year was always going to struggle to deliver.
Yeah, but I think it will deliver. But the only question is, you don't want to be waiting for that, extra whatever it is and risk everything. You just basically take
right for an extra little piece.
Yeah, for an extra little piece. So you take your money. And then you think, and if the market gives you another, opportunity, let's say it comes off big time, that's another great opportunity. If it keeps going up, you keep waiting and see what happens. But yeah.
Victor, China, the sort of somewhat slowdown in imports of oil the first half of the year versus the second half of last year, there has been a sense that China has been drawing on its own inventories that it built a lot last year very cheaply. Is that continuing? What's your outlook for Chinese inventories to be drawn down in the second half of the year?
Well, first of all, the country will continue to, consume the stockpiles, in the second half of the year, that's for sure. And now the government is now tightening the quotas for crude imports, as a lot of independent refiners do not follow the country's regulations on the oil market. So the government has been inspecting refiners, including independents and state-owned ones since April. And the government slashed this year's second batch quotas for non-state crude imports, mostly granted to independent refineries. And another issue that could impact the country's crude imports is the quotas for oil product export. Saying the government used to issue the year's second batch of quotas for oil product exports in April to May in the past years. But this year, it has not granted the second batch of export quotas yet. And these quotas could kind of impact the country's crude demand because the country exports, surplus oil products, in the past, actually increasing oil product exports. But now, if the government tightens the export quotas too, demand for crude will kind of drop to some degree. So the market is kind of waiting to find out when the government will issue this year's second batch of quotas for oil product exports.
And Victor, just one last quick question. Chinese tourists became a very big part of the global economy in the last few years pre-COVID. Is there any sign that Chinese will start traveling abroad again anytime soon, let's say this year?
No, not quite possible. And
No.
the government is not likely to open its borders yet this year. And we have not seen the end of the pandemic yet.
Right. Okay. Well, that's pretty clear. No tourists walking around Mall of the Emirates, Omar. So you can get front of the queue for Starbucks. Let's get the survey result and give Dr. Charles the last word this morning. Should OPEC risk supply agreement by insisting on sign-off now for extension beyond April 22? 2-1, no, it should not. Well, that seems sensible enough. That's a lot to risk. Dr. Charles, your thoughts on the outlook for this week. And also, I wanted to get you to comment on the underlying thesis of this sort of disagreement, if you like, within OPEC is about the future supply quotas, given that the majors are backing away from a capex expenditure. It would seem there's great opportunities for the national oil companies in the Gulf and elsewhere to capitalize on that new market share. What does that mean for the East Med?
Well, first of all, I expect a compromise this week, and we're going to move on and forget about this. There is no question that the OPEC countries are gaining strength in terms of the future, simply because the independents, the international oil companies are under massive pressure from ESG, from environmentals, and as you said, spending is not going up. One of the reasons is that dividends need to be maintained, and that will continue. The East Med will carry on going nowhere. I expect that.
We saw yesterday Qatar Petroleum purchasing 3 concessions in South Africa, perhaps in the absence of the oil majors, that the national oil companies of the Middle East might come more into the East Med.
That's exactly what is going to happen. In the longer term, the position of the IOCs will weaken, and it will be replaced by the NOCs. In the East Med, I expect a summer of lull, a summer of not much happening. There are some indications that ExxonMobil may come back to complete appraisal drilling of the discovery they made in 2019. But beyond that, there are not massive expectations that anything else is going to happen. And with Europe definitely going away from gas, and we'll hear more about this next week, I don't see the SMED returning back to the high expectations of 2019 ever again. It's going in a different direction. The NOCs might come and rescue it, but the future for the East Med is to look regionally.
So the East Med is ultimately the first victim, or perhaps, of the great energy transition. The timing just went against it. Let's wrap it up there. Dr. Charles, thank you so much for joining us this morning from Holland, Victor Yang from China, Omar Najia from the UAE. A big day to see where OPEC decide to move, and the sober view of the room appears to be they'll find a way through because there's just too much at stake with $80 oil just around the corner. Why would you throw that in the garbage? I think not. Thank you, everybody. Have a great day. Have a great week, and we'll catch up with you in the coming mornings. All the best. Thank you.